This week, HECM expected rates are climbing. Here's why.
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome back to the Industry Leader Update. 10-year treasuries jumped up to 1.74% last week, a level we haven't seen since January 2020. The CMT, or the Constant Maturity Treasury rate, has been on the move, a fact proven by last Thursday's 10 basis point jump in just one day for the index, which is used to establish the expected rate, and of course the available funds for federally insured reverse mortgages. Then on January 4th, 2021, the first trading day of this year, at that time, the 10-year Constant Maturity Treasury rate was just 0.93%. So what's behind the sudden surge in long-term treasuries? In short, it's traders in the bond market. An axiom that many viewers may recall is that when bond prices drop, treasury yields go up. It's an inverse relationship with each reacting opposite to the other. Newton's third law does come to mind, which states for every action, there is an equal and opposite reaction. That seems to aptly describe the market. So what are the talking heads on cable saying? CNBC's Jim Cramer sees the bond sell-off being fueled by concerns of inflation that are beyond the Federal Reserve's projections. That as a result of trillions and trillions of dollars of stimulus money being pumped into an economy that is already recovering. Bloomberg columnist Brian Chapata said, bond traders were throwing yet another tantrum as if to dare Fed Chair Jerome Powell and his colleagues to stop them. In other words, Federal Reserve Chairman Jerome Powell is sticking to the Federal Reserve's annual inflation projections of 2% each year, and that holding through 2023. And the Fed does remain committed to keeping the central bank's benchmark rate near 0% through 2023. It is the long-term treasury market, however, that accounts for the long-term interest rates we see. So bond fund manager Bill Gross told Bloomberg he is actually betting against long-term treasuries because he expects inflation to reach 3 or 4% before this June. Now, it is this divergence of opinion, which by the way is not uncommon in treasury markets, that has spurred the treasury yield to go up. So how high could we see treasury yields actually go? Mortgage executive and author Barry Habib sees higher mortgage rates being sooner than later, especially if inflation rates spike. However, Bloomberg's Chapata, while he does acknowledge treasury yields may actually climb in the short term, sees in the long term that investors will ultimately become reconciled to the fact that, in the end, it's the Federal Reserve that is going to be the one who prevails. So what should HECM professionals expect this spring? One is that the pace of HECM to HECM refinances will gradually come back down to earth as the weight of higher expected rates drag on the fervor of equity harvesting. And with some reverse mortgage brokers, deriving nearly 80% of their business from refinance transactions alone, it would be a prudent time to shift the focus back onto market expansion and professional networking. Then there's all mortgage rates that are going to be buffeted by the market trading turbulence. And we've seen that in the last month. We've seen traditional rates actually go up significantly. Higher treasury bond rates translate into higher mortgage rates for everyone. Now, fortunately, even if we see rates climb actually through the spring, home values are expected to remain unchanged or even modestly increase because we have incredibly constrained inventory just prior to the home buying season. So what can you do? Check your pricing sheets closely. You want to certainly reach out to those who are on the cusp or the bubble of having just enough proceeds to pay off their existing liens. And please give us your outlook for this coming year when it comes to inflation and rates in the comment section below. We always appreciate your feedback. Thanks again for joining us. Be sure to share this video with other reverse mortgage professionals. You can do that using the social media links on this page. If you're on YouTube, be sure to subscribe. That way you never miss an upcoming episode. And each and every Monday, we have the latest edition of the nation's only weekly podcast for you as a reverse mortgage professional, HECM World Weekly. You can listen on iTunes or on HECM World. Be sure to check your email today. There's a link so you can listen as well. We'll see you next week. Happy selling, and come back for more reverse mortgage news, commentary, and analysis here at HECM World.